Hello and welcome back to another video. Today will be the first video in which we talk about day trading. Now, day trading is very notorious for, how 80% of investors lose their money, as well as how it's just not a profitable form of investing in the long run. I think everyone has their own opinion, but I want to, in my own experience, destigmatize that idea, and I want you guys to see firsthand what it's like to invest, and you can make your own decisions based on that. So the first aspect that I wanted to talk about were the indicators used in day trading. So day trading, if you guys didn't know, it's basically when you invest in a stock or like an equity or Forex even, and you hold your position for a short period of time throughout the day. So it's like intraday trading. There's also swing trading, which you hold overnight, but we'll get onto that in another video. For now, we will focus primarily on day trading. So the four indicators which I want to talk about that I think are the most productive in illustrating the way the market's going to move, the way the stock's going to move, are the MACD, which is the moving average convergence divergence, the RSI, which is the relative strength index, the EMA, which is the exponential moving average, as well as the VWAP, which are these three lines here. So first I want to talk about the MACD. So the MACD is very good in illustrating when there is a trend, an upward trend or a downward trend, and the way that it's told through the crossovers. So these crossovers here tend to illustrate a change in direction. So for example, as you can see here, as it's hitting a low and starting to cross over the red line here, we can see up here an upward trend is starting to form as well. And if you look along the pattern, that's pretty consistent. And ultimately what you want to take away from this is that in theory, here, when it starts to converge upwards, that's the ideal point where you want to buy your stock. When you're starting to converge downwards, that is ideally where you want to sell due to it being an indication of a downward trend. And you can see confirmation here as this goes down, the American Airlines stock also goes down. Now remember, do not take this as your sole indicator and judge your decisions based on this, because patterns are there. Patterns tend to repeat themselves, but they do not always repeat themselves, and it's always up to you to understand and make your decisions. So the bars here are also a good indicator the bars here are also an indication of the exact same thing. The closer the bars get to the x-axis here, that's basically illustrating when the crossover is occurring. So when it's going from green to red, that's when it's converging downwards. When it's going from red to green, that's when it's going upwards and a sign of an upward trend. Okay, so now let's get into the RSI. So the RSI is the relative strength index, and this is actually a key indicator for measuring the volume. And it basically serves as a reassurance if something is oversold or overbought. So as you can see here, if the RSI tends to go above this line of 70, that tends to mean that the stock is overbought. And in this case, a sell-off is about to occur, which inevitably leads to a downtrend in the actual stock, as we can see here. So it's very important to note that ideally, when a stock is overbought, you want to sell it, and when a stock is underbought, that's when you want to buy it. So at the dips here, you want to buy, and at the tops, you want to sell. That is, in theory, the practice of RSI. Once again, do not judge your whole strategy behind this, as it's only to serve as technical analysis, but also revert back to the fundamentals which I will talk about in later videos, but fundamentals of your strategy and of the stock, of why you invested in the first place. Alright, so now let's get into the VWAP here. So the VWAP is another indicator which it can tell you if a stock is trading upwards or downwards. So signs of an uptrend would be when the stock is trading between the middle VWAP and the top VWAP. Okay, so the middle VWAP can act as a support or resistance for the stock. In this case, if it's trading between the middle and the top VWAP, that means the middle VWAP is acting as a support, and it tends to generally mean there's an uptrend occurring. If, however, your stock is trading between your middle VWAP and your bottom VWAP, as we can see here, that means the middle VWAP is acting as a resistance, and more likely than not, your stock is trading at a downtrend, and this wouldn't be an ideal place to invest in at the moment. You want to aim for when the stock is trading here because when the overall pattern is in your favor of an uptrend, it's more easy to make consistent gains rather than having the trend against you and you trying to pick out specific times to make your decisions. Okay, and finally, the last indicator, which is fundamental, is the EMA, which is the exponential moving average, this little blue line here. So the EMA line illustrates the general direction of the trend, and ideally you want to have your stock trading above the EMA line, with the EMA line acting as a support for the chart. That generally represents an uptrend, and you can also use this to see reversals early on. You can imagine like the EMA line to have a little arrow at the end of it, and that's basically telling you the direction of where the EMA line is headed. So for example, if the EMA line starts to shift downwards, that's an early sign that, okay, maybe the reversal is happening in the stock, so I better sell at this point. You can use the other indicators as well for confirmation, as well as your own due diligence to understand what you want to do in your position. The EMA line, it's a lot better in the short run than the SMA line, just due to the fact that it reacts a lot faster and is ideal for intraday trading. And I think ultimately using all of these indicators will help you in your technical analysis, and that they're foundational understanding the direction of your stock, the trend of your stock, as well as seeking out early reversals. However, it's important to not be hung up on these indicators and to do your own due diligence and understand why you invested in the stock in the first place and understand why you have your position. That's like reverting back to the fundamentals, balance sheets, etc., which I will get into in later videos. This is just about indicators solely, but do not rely solely on these indicators, as patterns do tend to repeat themselves, but that is not always the case in the stock market. So just a little brief explanation of what these indicators are and how you can use them to your own advantage. I hope you guys gained value, and this is my first video in terms of many more to come on the topic of day trading. So I will see you soon in the next one.